Let's begin. Number 7. The High Priest admits it's a cult. Imagine the Pope casually mentioning at brunch that he's starting to have some doubts about this whole God thing. That's basically what just happened in the tech world. Sam Altman, the CEO of OpenAI and the unofficial high priest of the AI religion, recently leaned back and told reporters, "Yeah, this might all be a bubble." He even gave us the exact recipe for financial disaster, saying, "When bubbles happen, smart people get overexcited about a kernel of truth." This is the polite billionaire way of saying, "You're all losing your minds over a shiny new toy, and I should know, because I'm the one selling it to you." He even had the audacity to compare it to the dot-com bubble. You know, that magical time in the early 2000s, when the NASDAQ lost nearly 80% of its value, because investors discovered that most internet companies were just a PowerPoint presentation, a sock puppet mascot, and an absurd amount of debt. The fact that the guy who has raised tens of billions and is now talking about spending trillions is the one telling you to calm down should be setting off every alarm bell in your nervous system. He's building the financial Death Star and simultaneously warning everyone that it has a very obvious, very dangerous exhaust port. The bubble isn't a secret anymore. The guy blowing it just told you it's about to pop. Number 6. Your portfolio is priced in bananas. So if this is a bubble, what exactly did your 401k just buy? A piece of the future? A slice of a world-changing technology? Nope. It mostly bought hype. Most of the news you see isn't about the revolutionary value AI has already created. It's just about how much the stock price of a few companies like Nvidia has gone up. That's like judging a restaurant's food by how much their forks cost on eBay. It's a completely meaningless metric that somehow everyone agreed to take seriously. Here's the part they don't want you to think about. When a company's market value skyrockets by hundreds of billions, that money doesn't magically appear in a vault somewhere. It's an illusion. It just means the last guy to buy a share paid more than the person before him. Think of it like this. If one person in your neighborhood sells a single, slightly bruised banana for $10, that does not mean all the bananas on Earth are suddenly worth trillions. It just means one very confused person is about to make an offensively expensive smoothie. The entire AI stock boom is built on this principle. We're not measuring real profit or utility, we're just measuring the excitement level of the last person to hit the buy button. If you burn trillions on infrastructure, and all you've really created is a slightly more articulate spell check, you haven't built a revolution. You've just funded the world's most expensive PR campaign. Number 5. History's most expensive shopping spree. Okay, so what is this bubble actually made of? It's not hopes and dreams. It's metal, electricity, and a mountain of invoices so tall you could see it from space. Get ready for some truly insane numbers. In 2024 alone, just 4 companies, Amazon, Meta, Google, and Microsoft, are on track to spend over $160 billion on AI infrastructure. For context, that's more than the entire GDP of Hungary. That's just 4 companies. And that's only the stuff we know about. But we know they've raised over $10 billion, and Altman is openly talking about needing $7 trillion for future data centers. That's not a business plan. That's a plan to colonize Jupiter. Meanwhile, China's state-owned companies have reportedly dumped another $500 billion into their own AI build-out. Add in chip sales from Nvidia and AMD, and we've already cleared the $1 trillion mark on hardware alone. That doesn't even count the energy, the staff, or the therapy bills for the engineers. We are witnessing the most expensive, panic-driven shopping spree in human history, and no one has stopped to check if any of this stuff actually, works. Number 4. Your toaster now competes with a supercomputer. If you've noticed your electricity bill has been looking a little terrifying lately, you're not crazy. You're just subsidizing a chatbot's poetry habit. Right now, data centers already consume about 1.5% of the entire world's electricity. And thanks to our new AI overlords, the International Energy Agency predicts that number could double by 2030. This is a fun, gentle way of saying we are genuinely at risk of running out of power because your boss wanted an AI to generate motivational cat posters for the break room. Your personal energy consumption is a rounding error compared to the godlike thirst of a single AI server farm. The United States grid is particularly unprepared for this. China, meanwhile, built their grid more recently and maintains a 100% reserve, meaning they can plug in a new city-sized AI brain without causing a regional blackout. This strain is hitting your wallet directly. US electricity prices have nearly doubled in the past 3 years, and a big chunk of that is this AI build-out. So when your grocery bill goes up, it's not just inflation. It's partially because your neighbor just spent an hour asking an LLM to write their wedding vows in the style of a pirate. The AI boom is slamming into a very real, very old wall of infrastructure, and you're the one paying for the collision. And now for the dumbest financial decision of the year, the AI boom is slamming into a literal wall. Imagine building the world's fastest race car, but then realizing you live on an island with only 10 feet of road. That's the AI industry right now. It's not just that we don't have enough electricity, we literally don't have enough places to plug the damn things in. According to Goldman Sachs, new large-scale power capacity in key US markets won't be ready until 2028 at the earliest. That's years away. But the demand is right now. As a result, data center vacancy rates have plummeted to below 3%. There are no more warehouses left to fill with humming, glowing, money-eating servers. We've run out of space. The digital revolution is being stopped by a shortage of physical real estate. Companies have spent hundreds of billions on futuristic AI chips, but they have nowhere to put them. It's the tech equivalent of buying 1,000 Ferraris and having to park them in your living room. The unstoppable force of AI hype has just met the immovable object of a boring zoning permit and an overbooked power grid. And in that fight, the boring stuff always wins. But wait, it gets dumber. The tech itself is broken. So we've established that companies are spending insane amounts of money on hardware they can't plug into a grid that can't support it. But surely for the lucky few who get their AI running, the results must be spectacular, right? Well, a recent report from MIT called the Gen AI Divide decided to check. What they found was that a staggering 95% of companies using generative AI got zero return on investment. Not a disappointing return, not a small return, zero, nothing, a big fat goose egg. It turns for all the slick demos. The moment you drop these tools into a real-world business workflow, they fall apart like cheap IKEA furniture in a hurricane. They're amazing at short, simple tasks, but researchers found they completely collapse on longer, more complex ones. Even coding, which was supposed to be AI's killer app, ends up creating more bugs and security holes than it solves. It's so bad that companies are now hiring human AI code janitors to clean up the mess the AI leaves behind. Just think about that. We were promised an AI that would take our jobs, but instead it's just creating new, even more annoying jobs for us to do. We've spent $1 trillion to build a machine that's really good at making more work for everyone. And for our grand finale, the single dumbest reason to burn $1 trillion, pure, uncut peer pressure. It's not just that the tech is broken, it's that the ground it's built on is fundamentally unstable. These AI platforms are changing so fast they keep breaking their own ecosystems. When OpenAI rolled out its latest model, it quietly broke support for countless tools that developers had spent months building. Imagine if every time Microsoft updated Windows, it randomly deleted Microsoft Word. That's the nightmare that people are trying to build businesses on top of right now. So not only is the AI failing to deliver returns, but it can't even stay upright long enough to try. It's like trying to build a skyscraper on top of a bouncy castle during an earthquake. So if the tech is a buggy, unstable, energy-sucking mess that produces no return on investment, why are sane, publicly traded companies still lighting dumpsters full of cash on fire for it? The answer is simple and deeply human. FOMO, fear of missing out. No CEO wants to be the one guy who missed the next big thing. Every executive watched their competitors slap AI powered on a product and get a free 20% stock bump, so they all panicked and did the same. Budgets were rewritten, entire teams were rebranded, and the phrase AI strategy was repeated in boardrooms like a magic spell to keep investors from asking hard questions. It's not about results. It's about not looking like the one dinosaur at the robot party. Number 1, the invisible bubble machine. This whole fiasco is being inflated by a secret weapon, private money. In Silicon Valley, you don't need a working product to get funding. You just need a good story. And right now, we are building the future with AI is the ultimate cheat code for fundraising. Venture capitalists are calling this the biggest private tech bubble in history, which is really saying something, considering these are the same people who once gave a guy $400 million to build a Wi-Fi-enabled juicer that squeezed pre-squeezed juice packets. Because this is all happening behind the closed doors of private markets, there's no daily stock price to call BS on the valuations. A startup can raise $1 billion, burn through all of it, and as long as the next investor is willing to put in money at a higher valuation, everyone can pretend the company is a wild success. It's a collective delusion held together by ego and the desperate hope that you can cash out before the whole thing collapses. It's a game of musical chairs played with billions of dollars, and the music is about to stop. So yeah, the bubble is going to pop. The hype driving these stock prices will evaporate. But that's not the end of the story. After the dot-com bubble burst, thousands of worthless startups with cute mascots vanished overnight. But from that rubble, companies like Google, Amazon, and eBay crawled out and actually built the modern internet. The same thing will happen here. Most of the flashy, promise-everything AI companies will disappear. The survivors will be the boring ones, the companies quietly building better chips, more efficient data centers, and smarter power grids. The AI isn't going away. It's just going to stop being a magic show and start being a useful, quiet tool. Basically, capitalism is just expensive trial and error. Subscribe so you don't miss the next error.